This is an RNZ podcast.
Hello and welcome to this episode of Your Money with me, Mary Holm. Thanks for taking just a few minutes to listen in while Jessie Mulligan and I talk through some useful ideas about how to make your money work better for you. Just remember though, this is guidance. Final decisions are up to you. Over to Jessie.
Let's go to Mary Holm, personal finance expert, who joins me now. Hello.
Hello, Jess.
Hi.
We're here now. G'day.
You've been busy this morning.
Yes, I've been at the Westpac Massey FinEd Centre conference about financial literacy, and I saw they had a whole list of papers that looked pretty interesting, so I sat in on 3 of them. One in particular was really interesting about payday lending. Yeah. But can I just quickly tell you there were a couple of really key points from 2 other papers that I thought were worth discussing a little bit. One was an Australian expert talking about teaching financial literacy in schools. And everybody always, all the time, says we should teach more financial literacy in schools. But one of the things she pointed out, and I've heard this before, is that quite a lot of research suggests it's not doing very much good. A lot of the teaching that's going on in Australia, they seem to have some pretty fancy education programs, and I've heard in America the same sort of thing, that it's not doing much good. And in fact, financial literacy has been going down in one piece of research in Australia. And the thing that there's sort of these researchers are zeroing in now is that she says people experience money in different ways, and the kids who most need financial education, because they're not getting it so much from their home, because that's obviously another place where kids learn about money, the kids that are not getting it from their homes are not being taught it very well in school. And she said, for example, there should be more information given on how to get government support in some parts of the community, how to make complaints if you've got financial stuff going wrong, that sort of stuff that she said one size just doesn't fit all, and we need to be broader in the messages.
Not enough to know how compound interest works. You need some of the more kind of practical grappling hooks. Yeah. Particularly, I would say, I'm just going off on a limb here, but it seems to me that a lot of the people offering loans actually make it their business to make it a little bit confusing for you.
I think you're absolutely right. And a lot of financial products, as well, it's not in their interest sometimes to make it clear, because things are often riskier than they at first seem. So there's a way to go on this financial education stuff, which is certainly happening a lot more, and I know that everyone's in the industry is aware of these problems, but there's a fair way to go. And then there was another paper that was a couple of Massey lecturers talking about what they call self-efficacy, and I didn't know what that meant, but I learned. They're basically, the way they explained it is people's feeling that what they do, their actions and their efforts, actually make a difference in their life. And apparently there's a wide range of that, from people who feel quite convinced that they can make changes in their life and make things better, to people who just feel like whatever they do, things are going to go wrong anyway and they've got no control over it much. And their research suggests that is much more. They were looking at net worth, which is not people's incomes, but their assets minus their liabilities. So their home and their investments and savings minus any debts they've got, which is a basic message of how wealthy people are. And they found that there was possibly a closer correlation between whether people had this self-efficacy thing and their net worth than there was between, say, their financial literacy and their net worth. So it's not all about what people know. It's also about how they feel about what they can do in their lives and whether they feel like they can make things better for themselves. And then, of course, the question arises as to what we can do for people who have got a low self-efficacy, who don't really feel they can make a difference in their own lives. And
can I ask, was it easy to follow? Because it sounds quite sort of on the academic side.
Yes, it was an academic paper, it was,
Yeah.
yes. But I just thought the overall message was really interesting, because we keep on thinking we just need to get people knowing more, but it's partly their approach to life, really, it seems. And so the next question that arises is, how can we help people who've got low self-efficacy? And they said that's just a new topic, really, that some research is happening, and they've got a better chance of changing it for young people, which is what you would expect, really. So perhaps what that leads to is not just in schools teaching the kids financial stuff, but also trying to help change their attitudes about what they can do to make their own lives better.
Yeah.
It's an interesting topic for us to all to be pondering, really. And
as you point out, it's no use just sort of going back to these hackneyed, we should be doing more of this in schools. You've got to work out how to do it effectively.
Yeah, in a way that really
changes people's
helps,
lives. Yeah.
Especially helps the kids. We all see it all the time, that if the parents are quite well educated and got their own money act together, the kids tend to have too. So we really want to be helping the ones who don't.
And we want to make sure that people are mobile, right? Economically
yes, absolutely.
Mobile.
Yes, which, in America they've always been proud of being mobile, and certainly they are more than, say, in England, or traditionally that's been the case. And I think New Zealand's still pretty good in that children of poor people can do pretty well for themselves, but nonetheless there's still some stickiness in there at times, isn't there? Yeah, it's interesting stuff.
And to the seminar given by a certain Victoria Stace of Victoria University, Wellington, Payday Lenders, Friend or Foe.
Yeah, she's a law lecturer at Vic, and she's been working with FinCap, which is the organisation in New Zealand that does free budget advice for anyone in New Zealand who gets into financial trouble. And they've been pushing to get an interest rate cap in New Zealand, and they finally won a victory on this with Victoria's help. So just a little bit of background about what's been happening. The payday lenders, there are apparently more than 30 providers in New Zealand of this sort of loan, and there'll be quite a few listeners who don't even know much about them at all, or perhaps even don't know what they are. They basically lend money over a very short period. The idea is that your payday's coming up perhaps 10 days from now, and you need some money until then, and when you get your pay, you can pay back the loan.
Yeah.
And
I was in Australia recently, by the way, and went through a shopping mall, and it seemed to be everywhere. Is that your phone, Mary?
Did it? No.
You sure you left your phone on?
I've turned my phone off.
Okay, maybe it's mine. Sorry. It seemed to be everywhere, this idea that you could go into a shop, a slightly different system, I think, but the same sort of idea that you could just take whatever you wanted
and pay later. That was brought up briefly at the end of this, and that's a whole other area, the pay later system, whereas which the regulators are probably going to be looking into next. But what's happening with the payday lenders is they charge interest on a sort of daily basis, and apparently if you pay the loan back in a week or whatever, then while it's a very high interest rate of up to 800% a year is what it calculates for, but over a few days or a week, it's not that much more money. Like someone might borrow $100 and end up paying back $115 or something. Now that's a huge, big interest rate, but for them, they need the $100. They're going to pay back $115. They just do it, and there's a lot of people out there. The trouble is, the big problem with it is not so much people who really can pay it back, and in fact, the websites, the advice says you mustn't get into this unless you really are absolutely sure you can pay the money back. The trouble is people get desperate. They can't feed their children or whatever, and they let's just grab some money today and we'll worry about it later. And that's when loans end up being, people end up paying back 4 or 5 times what they borrowed. It's quite horrific. But what's been proposed already some months back the Chris Farfoy, etc., announced that the government's going to set a rule where the interest and fees over the life of a loan can't total more than the loan itself. So if you borrow $100, the interest and fees can't total more than another $100. So you'd be paying back $200, including the fees. They had to add an extra provision in there, actually, because and make it only for people who are charging high interest rates and short-term loans, because a lot of mortgages are like that. And they said, oh, help. Yeah. Especially these days with mortgage interest rates as low as they are, that doesn't happen quite so much, but it can with a 30-year loan. And certainly when the interest rates go back up again, which they will, if they're up sort of 5, 8, 10 sort of percent, then people quite often end up paying back way more than twice as much as they borrowed. So, and the government's obviously not trying to stop mortgage lending, but it is trying to stop the short-term thing where people borrow $100 and end up paying back $300 a year later, So that rule was coming in a bill that's before Parliament, was that they couldn't charge more than the total of the loan. But this new piece that got added in September, Farfoy announced that they're going to add another daily interest rate cap of 0.8% a day, which is still pretty high, because that's per day, so that compounds pretty darn fast. Yeah. But currently, some of the loans out there are 1.5% a day, and so they've got the cap at 0.8% a day, so that at least curbs the rate somewhat. And that bill is expected to be passed probably by the end of this year and come into effect next March.
Oh, hopefully it'll make a real difference for the people who need it.
Yes, absolutely. Yeah. So, but some of the things that Victoria Stace said, she said there's been the payday lenders have come in and opposed all of this and said hardly anyone actually runs up huge bad debts and big long debts. They do pay back these short-term loans, but the research shows that's not true. That a lot of, and the budget advisors around the country are reporting back that no, there's a lot of people that get caught up in this horrible web. Another worry that's been expressed is that if some of these payday lenders go out of business, and the suggestion is that they probably will. Other countries, UK and Australia in particular, they looked at, but most of the countries in the world, they put a big map of the world up and showed them, most of the countries in the world have caps on lending rates, and New Zealand's been way behind on that. And other countries... As in when they bring in caps, yes, these lenders disappear? Some of them disappear. Yeah. The unknown question is how much sort of underground lending then happens, illegal underground lending. People get desperate. Yeah. And the payday lenders aren't going to want to take on such risky people if they can't charge very high rates to cover the costs of chasing these people down. And so... the research suggests there hasn't been too much illegal lending, although there was a South African woman at the conference who raised her hand and said, look, in South Africa there has been quite a lot of illegal stuff going on, and the response from the New Zealand people was, well, the budget advisors are going to hear about that. People get into big trouble. They're going to end up with a budget advisor, and they can tell the budget advisor that they've been seriously ripped off, and then the budget advisor can get action taken. Yeah. And the South African woman said, well, maybe not. Maybe they won't go to a budget advisor because this is their only source of money if they're really desperate and they've got a terrible credit record, etc. So it's not as if there's an easy fix here. People who desperately need money and can't feed the kids, that kind of thing, are, if we've lowered the returns that the providers of these loans can get, they are going to tend to turn down the really desperate people. The best answer is there are some, I understand, in New Zealand, sort of charities set up to give low interest loans to people who are really desperate. Wow. But they, in turn, don't want to take on people that just are never going to be able to pay them back, and so that's where maybe the government's got to step in. The government does sometimes give money to beneficiaries and others who are in deep trouble, or lends it to them. Yes, so, it's all hard to know exactly what's really happening out there.
And you can point to something and say, well, that's not right, but whether your solution is going to be what's required to fix it or not is a separate question.
That's right. I mean, regulation isn't a panacea. But having said all of that, there's got to be some payday lenders out there who, because of these changes in rules, will just simply lower their interest rates and still lend to Joe blogs, and so Joe won't have to pay quite as much back as he did before. Yeah. So all in all, I think it's good news, and we've got to and hopefully some of these people just go out of business and go and do something else for a living, and there won't be so many people being treated so horribly.
Mary, did you have a birthday last week?
I'm not going to answer that on the grounds I might incriminate myself. How do you know that?
Don't know, just asking. You don't have to answer.
Speaking of birthdays, though, Victoria Stace did tell the story of a woman who, a Gisborne solo mother who came down to talk to the select committee having a look at these proposed changes, and she had borrowed $400 for birthday presents for her children because she desperately wanted, and she felt that she would be able to pay it back because things were going to get better. She knew they were, but they didn't get better. And so she found herself in big trouble, and in the end a debt collector got involved, and she's still paying it back a year later, etc. But right on top of all of that, she's struggling to pay it back, and the lender sends her an email that says, "Happy birthday, Sarah. Do you want to take out another loan to buy yourself a birthday present?" Such predatory behaviour. It's horrible.
Well, I'm afraid to say, if you did have a birthday last week, I didn't go into any debt buying you a present, Mary.
Didn't you, Jesse?
But we appreciate your ongoing contributions to RNZ. Thank you.
Very good. Thank you.